3i Infrastructure is a London-listed investment trust that provides public market investors with access to private infrastructure businesses across a variety of megatrends, sectors and geographies. Our aim is to deliver investors a return of at least 8 to 10% per year over the medium term. That return comes through a mix of income and capital growth, with outperformance generally coming on the capital side. We also have a progressive dividend policy and have grown the dividend per share every year since IPO in 2007. The current year dividend target is up 6.7% on last year. 3i Infrastructure's purpose is set around three key areas: investing responsibly, delivering long-term sustainable returns, and having a positive influence on our portfolio companies and their stakeholders. So that's what drives us. Three I Infrastructure is unique in the listed infrastructure market. Unlike other listed infrastructure investment trusts, we invest in a diverse range of real businesses with employees and with strong market positions. Most other listed infrastructure companies invest predominantly in limited life concessions, such as schools, hospitals, or roads, or in renewable energy projects like solar or wind farms. We look for high quality companies providing essential services that we expect to benefit from long-term megatrends that should ensure demand growth across the economic cycle. The COVID pandemic really demonstrated this underpin to demand in tough economic times, with our portfolio companies continuing to perform and their employees being seen as key workers. We also look for companies operating in predictable and stable markets. This should provide downside protection, including through maintaining margins during a period of high inflation. The valuations of our companies are typically positively correlated to inflation. Finally, we back exceptional management teams. Once invested, we work actively with our management teams to maximise value creation for our shareholders. We're on the boards of all our portfolio companies, which means we can drive strategy, execute add-on M&A opportunities, establish appropriate capital structures, and raise CapEx facilities. We're always looking for opportunities to outperform our investment cases. We want to invest in businesses that have a supportive tailwind, which means there'll be demand for their services across economic cycles and over the long term. Companies like these generally provide essential services and are not GDP cycle related. Megatrends supporting our businesses include the energy transition, digitalisation, demographic change, and upgrading ageing infrastructure. For example, within the energy transition, themes such as the electrification taking place in Europe or carbon capture and storage will feature heavily in the decades to come and will require a lot of investment. And these are areas that we'll look to invest in. We're currently invested in one of the largest anaerobic digestion plant developers and biogas producers in the UK, as well as the largest generator of electricity from landfill gas, also in the UK, which will both benefit from the transition towards net zero. We're all using more data, both at work and at home, so the digitalisation megatrend is another one to invest in. So we've invested in companies which provide subsea fibre optic networks around the world, providing connectivity offshore and between countries and continents, as well as a company building a new fibre to the home network in Germany. Having a supportive tailwind from one or more megatrends gives our companies the opportunity to grow ahead of our original investment case, as well as providing downside protection in difficult market conditions. The company's performed extremely well. We've considerably outperformed other listed infrastructure investment companies since IPO, as well as the FTSE 250. I'll give you some figures. 3i Infrastructure's total shareholder return has been almost 12% per annum since IPO. That's to the end of 2023. By comparison, the FTSE 250 has returned just over 6% per annum in that same time period. And as I mentioned earlier, we've also grown the dividend per share every year since IPO. As we said at our last set of results, we continue to deliver growth in net asset value through investing in growth opportunities in our portfolio companies and driving value in these companies through our active asset management. Our portfolio companies are strongly cash generative and have conservative levels of gearing. With very active management of those companies, we continue to believe we are well positioned for further growth. We have a track record of recycling capital within 3i Infrastructure and are disciplined in our balance sheet strategy, where we aim to be broadly symmetrical around zero cash, zero debt over time. We expect to repay the current drawings on our credit facility by selling assets at the right time. We have around 3 years left to run on that credit facility, so we aren't under pressure to sell anything. We always keep our focus on maximising shareholder returns, so that means selling the right asset at the right time in the right way. In addition, our focus for new investment is through the current portfolio, rather than adding any new businesses to our platform. We see lots of growth opportunities in the current portfolio, and we think those will provide strong risk-adjusted returns. Our portfolio consists of resilient businesses providing essential services to their customers and the communities they serve, and benefiting from long-term sustainable trends. These businesses are generating growth opportunities that are accretive to our investment cases, leaving us well positioned to build on our strong performance to date. So we remain confident in the outlook for 3i Infrastructure.